everyone, and welcome to another episode of the Let's Talk podcast. My name is Dimitri. This is my co-host Akim, and this week we're going to talk about meme stocks, the resurgence of Gamestop. During last week, it was a crazy week, and my co-host got a really interesting story to tell us about. So, hey, buddy, how's it going?
Hey, Dimitri, doing good. It was a fantastic week to be honest for the GameStop shorters. So I couldn't be any better. How's it going?
So this week, I know you. We go back and forth. I know your style. And on Monday, I go on eToro and I see a post from you. I'm going short at 30 on GameStop. And it was like loud and clear for everyone to see and read. And then you got a lot of hate. A lot of people were hating on you. And the thing went up. So please tell us what happened.
A lot of hate. I got a lot of hate, a lot of insults. So the thing, GameStop. Let's just come back a little bit. GameStop was once a good company. It was not a bad company. It was a growing company. It was even profitable. The problem with GameStop is that it failed to convert its business model to really become really digital. It has a lot of stores. All those stores represent a lot of costs, and these costs exceed the income that they make. And COVID actually was a fantastic opportunity for GameStop to bloom because there was like a huge tailwind. Gaming and entertainment were really sought after by people who were quarantined. I don't know if you probably remember, Dimitri, right? We were all quarantined. We were at home. Not much we could do, right? So automatically, you would think a lot of people would think about ordering stuff for entertainment. And in theory, GameStop should have been thriving during those years. But what happened is that sales of GameStop dropped because people couldn't go to the stores, and at the same time, the logistics of GameStop were not great. They did not partner with Amazon. They could have had their store inside Amazon, for example, but people prefer to go to Amazon, receive their order right the day after or 2 days later. While with GameStop, it was a lot more complicated to order stuff. So what happened is the fundamentals just kept worsening and worsening and worsening. And it was a very easy short for the hedge funds in 2021. It was very easy on paper, right? The problem is that you had a lot of people there on Reddit and on social media in general who wanted basically to give a huge middle finger to institutional shorters, to those hedge funds. And one of them that got famous is actually now known as Roaring Kitty, right? Keith Gill. He's, by the way, a CFA holder, just saying. He was recommending to buy GME. He bought a lot of GME. I think he put something like 50K of call options in GameStop. And it rallied like crazy in 2021, right? Because people had a lot of free checks, had a lot of free time. It was a crazy environment. Valuations were to the roof, not just for GameStop, but for a lot of stocks, also for crypto. So we were really in crazy environment. And the hedge funds that shorted, they lost all their money, they went bankrupt, etc. and etc. We know the story. And this time, what happened is this Roaring Kitty, 3 years later, 2024, he just tweeted some stuff. He never mentioned GameStop. He just published some videos there on some pictures and videos on Twitter, on X. And everyone got wild, actually. Everyone got wild. Saying Roaring Kitty is back, and GameStop pumped the first day and continued the second day. The thing is, so why did I open a short? I know I surprised a lot of people because I'm very risk-averse investor that is very conservative, and I really look at from a value perspective, I look at companies that I want to buy and to accumulate. And in the case of GameStop, why would I do such a risky thing? In fact, at least this is really what, from my assessment, the trade that I made in GameStop was one of the least risky trades that I have ever made. For me, it was one of the easiest, one of the most predictable trades that I did. And a lot of people got really upset when I said that on eToro. They called me arrogant. They called me all types of all types. They called me faggot. They called me stupid face. They called me everything. The thing is that uh, I I'm always careful. I'm always cautious when starting a trade. But for GameStop, it was really easy, and I gave that background in the beginning to explain better why it was easy. It was easy because we are not in this crazy environment for 2021.
Mm-hmm.
The rates are still high. No one has free checks. Retail investors, they don't have much of their savings left. Inflation burnt a lot of stuff from them. Um, and we're just not in that crazy environment, that crypto environment, right? In that just keep buying, buying, pumping, pumping.
Mm-hmm.
And even though it did pump, and it pumped almost to the level, not really, but it pumped really high. It pumped, I think, at $55.
Mm-hmm.
Pre-market, it even reached $70. If I'm not mistaken, in 2021, so there was a stock split in between, but 2021, using the price of now, I think it went up to 120, I think. I am not 100% sure, but it went quite high in 2021. And so what I did is that I decided to short the stock because it went up, not based on it went up just because of tweets that were unrelated to GameStop. It was
Mm-hmm.
not a social media group discussing GameStop, that it's an interesting stock, that it has a lot of future. I did not feel that there were really a lot of people coming in and discussing GameStop as a formidable opportunity. It was just one random guy from 2021 who posted random tweets, nothing to do with GameStop. So I knew from that perspective that the rally would be short-lived. And at the same time, I protected myself with a stop loss that was really high. I put the stop loss at something like 200 something dollars. That means if the stock would reach those $200, I would have to inject more cash to extend it. So even
Mm-hmm.
having injected all that cash, I think my position was only around 7% of the portfolio, including that super extended stop loss. And I
Mm-hmm.
knew that rally would be really short-lived for these reasons. And I did some research also on Monday. I decided to short on Monday, I think afternoon or evening, after the rally on the first day was completed. I did some research on that day, and I found out that from the pump that happened on Monday, only 30%, even less than 30% was actually from individual investors. The rest was completely algo based. And as we know, algorithmic trading is always super, super, super short term. It's always a matter of hours. So what all those algos did from hedge funds is they saw the activity on social media the day before, and they reacted to that metric in the first hours, of trading. And what happened the day after on Tuesday, which I would not say I did not expect, but I knew there was a possibility that it could keep going up. So what happened on Tuesday is you had a lot of retail investors joining in. They saw that the first trading day on Monday went crazy, actually because of algos. So a lot of people joined in on Tuesday, and it pumped the second day. And on that second day, I opened a second short position at $50. On Monday at 30, on Tuesday at $50, I opened a second short because I did expect that the algos would change their mind afterwards because there was not a real engagement, something, how to say, something, a real base, a real reason for sustained rally.
Okay.
And so that's why I'm saying that it was an easy short for me. I opened first one on Monday, I opened the second one on Tuesday. On Wednesday, it started to sell off. Unfortunately, for those retail traders, they are now the bag holders. All those that did the algo trading that, bought GameStop, they actually made a lot of profit, the ones who bought on Monday. The people who joined on Tuesday, they are now bag holders. And I shorted on Monday, I shorted on Tuesday, and I closed both positions successfully without leverage, zero leverage, 30% and 50% profit. I closed them before yesterday, Friday afternoon. I was also a little bit lucky. On Friday, the sell-off continued. There was a sell-off on Wednesday and on Thursday in response to Monday and Tuesday. Friday, luckily, the sell-off continued. There was a little bit lucky because GameStop announced that it's selling its shares. So the company is also selling its own shares, right? While you have those crazy retail coming in and buying more. GameStop announced that it's selling its shares because sales declined. So in a way, GameStop, it was their chance to get a bit more money on the sale of their shares. I'm sure they were just waiting for the pump to also sell, and that's why I said it was the easiest trade for me. And I got insulted by a lot of people who came, bought in, and they saw me. A lot of them saw me as as a type of guy that allied myself to the hedge funds.
Mm-hmm.
It's also related to the fact that I actually do work with investment funds, right?
Mm-hmm.
But I mean, work is a part, so I never discussed anything about GameStop in my professional environment. But people, I think they associated me to that as well, you know?
So was it an impulse play? You were like sitting on Monday because so this is a two-part question. So the people that they are the bag holders, they are the people that they don't follow the markets. And by the time they heard that GameStop had a pump and they rushed the second day, they became the bag holders. The people that actually follow it and they jump in the first day might have a chance to get out on the second day with basically 100% return. If it was purely a trade, don't try to do a long-term fundamentals on GameStop. There's nothing there. So it should be simply a trade, and for you was a trade as well, but on the short side. So please talk me through, because the way I do it, and I don't short sell, is I have a position in mind and I go about it. I'm thinking, I follow it every day, I follow the earnings and all that. So how you came about, like, so Monday you're watching the news and you see this thing pumping and you say, okay, I'm jumping in this because this is crazy. And I know it's gonna be just a couple of days or whatever, and I'm jumping in. Is that what happened?
So it was really not an impulse. So in my investment strategy, I have up to 10% of the portfolio that I can allocate in opportunistic trades. That's
Okay.
because 90% of my portfolio is very boring, very safe, very low beta. I have a beta of 0.76 at the moment, excluding GameStop. So 0.76, which means that my portfolio moves less than the market. When the market goes down or the market goes up, it moves less. And I wanted to spice things a little bit, but it was not an impulse to jump in GameStop. I had to react quickly. But it's not like I saw the craze and my heart started pumping and this did not happen. What happened is I had this cash on the side, 10% of the portfolio. I did not invest the 10%. And I saw this opportunity. I made the research. I checked the metrics. If it was a rally that could be somehow sustained for a reason. I did not feel any social media engagement from people, from real people. And I understood that it was really algo based the first day because of tweets the day before. And the Roaring Kitty, anyway, he cannot really speak about GameStop anymore. He had the congressional hearing some years ago because of what happened in 2021. So I knew he would not touch GameStop again. So those very indirect posts are everything actually that could explain a rally. And the rally in my opinion, could be maximum sustained 1 week, maximum. I actually thought at first that it would be sustained 1 week. I had enough cash on the side to open every day of the week. That was my idea. Every time the stock goes up by $20, I would allocate a little bit more. So I actually had cash on the side prepared for this. Unfortunately, it stopped rising already on Tuesday. So it was rising Monday and Tuesday. So I opened those two shorts. On Wednesday, I had an order for $70. It did go to
Mhm.
$70, but in the pre-market, but I did not want to touch to the pre-market GameStop because there are fees, etc. And also I
Yeah.
would be somehow stuck. There's less flexibility. So I had my order for Wednesday to 70, Thursday 90, Friday 110. I thought it would stop at 70. That's what I estimated. But it did not go to 70. It went to 55, only in pre-market 70. So I had this plan laid out, and in no circumstance would I exceed the 10% of the portfolio allocated, including all the cash that I injected to extend the stop loss.
Mhm.
And I made sure to not use any leverage, because as soon as you use leverage, even times two, first, your portfolio gets too volatile, and second, you have to inject really a lot more cash, and it's a lot more dangerous, you know?
Yeah.
And so I put it at 200 something dollars, $210, I think. But I was ready to extend it more if need be, knowing that even during the market craze in 2021, we didn't even come close to that level. So it was prepared. And a lot of people said that I went off course, that it was an impulse, then that I lost my mind, that I got crazy. And then, funnily, on Friday, when I announced that I closed the position, right, both of
Yeah.
them with good profit, people were like saying, the stock will continue going down. What are you doing? Are you crazy? Look how the stock is falling. We reached already 20. I think it will reach $5 next week. But the thing is that I have this plan that it pumped, and my target was always that level at which it closed before the tweets. Before the
Mhm.
tweets, it closed around the $20 level, maybe 18, 20. And so I always had this in mind, this target. I closed it at 2021. For me, it was fine to close it on Friday at 2021. I did not see the point to risk going through another weekend and to have something delayed, because on Monday it could pump again like a dead cat bounce kind of thing,
Mhm.
and I would lose some time. So I preferred to allocate that money in a better opportunity, and I actually very interestingly I use that money to invest in US 20-year bonds. So it's like the absolute opposite of GameStop, right?
Opposites. Yeah, you went from GameStop to the most
From shorting
conservative
GameStop,
thing that you can.
from shorting GameStop to 20-year US Treasury. But this was part of the plan.
Yeah, the exit was good. The exit was good because we talked prior before you exit. You told me you're about to exit, and
Yes, I
you
did
you
tell you actually, right? A day in advance. I
yeah
told you my target, and I mean
yeah
that shows, it's not based on greed. It's just pure analysis I made, and I
yes.
don't I
I
don't
want
want
to
to be
say
too
that.
greedy. Yeah,
You could
greed is
be,
the
and
risk.
most of the people that they are bondholders today is because they get greedy and they say 20, no, let it get down to 10. I want to make even more. And then another pump happens, and then you are
Mhm.
screwed,
Yes.
and then you're losing everything. But another thing I want to ask you is, how are you dealing with making a post and getting 380 comments, which 90% of them are like mean comments?
Mean comments, right? Look,
Yeah.
I showed the comments to my wife. She was laughing a lot. I mean, I think it's all those comments she had, she had it in her heart from we're married now 6 years, so I'm sure many times she wanted to call me faggot, stupid face, arrogant, and everything. So she was really enjoying reading that, and I was laughing. I was really laughing. Not I was at a loss at the time. When I was getting all those insults, I was at a loss. And then I
Yeah.
turned at the profit, and there was a huge silence, like a
Yes.
big silence, right? So all those insults were coming while I was at a loss. People were saying, "You should take your loss now. You will lose the entire portfolio. I will wave to you from the moon." All that kind of stuff. And I know that a lot of people can get influenced by this when you have hundreds and hundreds of people pressuring you to do
Yes.
something. The thing is that I know how markets are. Markets are very irrational. I know that people get greedy, and I know that when they were insulting me, I mean, it was nothing personal. I mean, they don't know me as a person, right? If you were
Mhm.
insulting me, there I would question myself, right? Like if you or my wife or someone close was really insulting me
Mhm.
for doing this, for putting, I don't know, savings at risk or whatever, there I would take it into account. But this, I know it's nothing personal because they don't know me as a person. And what was speaking, I try to understand what was typing for them, those
Mhm.
comments. And my conclusion was that it was greed. It was greed because they were saying, yes, I have the target $100. Some said it could go to a couple of hundreds of dollars per share. And so there was a lot of greed. And greed, unfortunately, changes people and makes people to be offensive, to be aggressive, to be dangerous. A lot of wars in the world, I don't want to get political, but a lot of wars start from greed also, No, like this is my land, I want more land, and then they don't know how to stop, they keep trying to get more land from the enemy, right? And I did see that this was greed, and usually when you have this extreme greed, it's a bubble that tends to burst at some point. So I did not allocate my entire portfolio on this. I didn't go all in, right? It was still a moderate bet. It was maximum 10%
Mhm.
of my portfolio that was invested, meaning 5% is at risk. So
Yes.
10% stop loss of 50%, 5% is in real risk, and that's okay. It's something I can live with uh,
Yes.
to risk that, knowing that the risk is very low.
Yes, because soon as you announce the short, that when on eToro, for the people that don't know, on eToro you can go and charge portfolios and you can see exactly how much your allocation is. So you can say one thing, but if your portfolio doesn't reflect that, then we can call you out. So I saw the allocation and I said, okay, even if it doesn't work, he's not getting hurt. He's
Mhm,
going to lose some of his performance of this year, but he's not getting hurt. It's not like you go 50%, 50% of your portfolio short on top of leverage and all that. Yeah, that would be
mhm,
crazy. But you didn't do that. And most
mhm,
people that were commenting, they don't even understanding what was the whole thing. And then they get personal with the stocks, things that we discussed before, that you shouldn't get personal with the stock that you invest in. This is just an instrument so you can make money.
mhm,
And you should look at it as such. Once the moment that you start getting personal and you're calling people that you don't even know from other countries, idiots and all that, because they shorted the stock that you love, then the issue is right there. But you did the right
mhm,
thing, that you were just explaining back to them your the way you are going about it, and the exit
mhm,
the exit of the short, when you cover your short position and you took profits. Then you got some people telling you good job and all that. That was at
mhm.
least nice to see some people say, you know what, you did a good job. But
Yes,
yeah.
I was actually happy, and we shouldn't mention only the negative things on Friday when I closed. So I'm really proud of my exit. So,
Hmm.
uh, I always question myself and challenge myself, but when you do something that is good, I think you should be able to tell you to yourself those things, that you did a good job. You should be
Yeah.
able to tell this to yourself, without getting arrogant or whatever. And what I'm the most proud of during that week regarding the trade is the exit. I think the exit was very clean. It was
Hmm.
done at a good profit. And even if the stock continues to fall next week, I still think the exit was quite clean, done in a timely manner. I don't have to be worried over the weekend or whatever. So I closed
Yeah.
it Friday, very close to end of day, after some good news for me that that the company was selling shares. And on Friday, to mention good things, there were a lot of people saying actually to
Yeah.
me, congratulations. Even some that went long, they said to me, okay, this time you won. Congratulations, bro. You made it. And really, there was a lot of fair play
Yeah.
on Friday, and I really appreciate it. There were still some that insulted, and when I checked, they were actually bag holders. They had the entire portfolio on GameStop or a big portion, and they were at minus, I don't know,
Minus
minus
99%.
a big minus. Some of them went with leverage and everything. I'm sorry for them. But I
Yeah.
think it will also be a lesson for them that greed is something dangerous. That greed usually makes you lose money. So it's important when you invest and trade, and this is really I'm telling this to the audience that you should try to be conscious of the emotions you have. If you feel your heart is beating and that you need to hurry on some kind of trade, be think about it twice,
Yeah.
put it on paper, make an assessment, try to see the pros and cons. um, and yeah, so this is what happened. But what about you, Dimitri? You decide to stay out from the trade, which because we were messaging you and me, and you were telling me, yes, this pump will go down. I mean, you were saying that as well, right? Not just to support me. I think you were really believing that the rally wasn't going
I
to
was
be
believing,
sustained.
and I
And
was
I mean,
believing what I was saying to
yeah,
you.
yeah,
I was believing what, sorry, I was believing what I was saying to you, and I knew it was going to go down, but I didn't want to engage in, I didn't want to engage because um, my portfolio is a little bit riskier than yours already. And
yes,
adding that to it will make it even more risky. Your portfolio is less risky than mine. So adding this to it, I mean, if you look at it the way finance people look at it, when you add a short position into a long only portfolio, it actually makes it like less risky.
yeah,
Okay, like on paper, right? The long
yes,
short, the long short.
on paper,
So
yes,
so I have crypto in there, I have some Tesla and some other
yes,
stuff. Adding a game short position, it will spike my risk score. So I didn't want to get any of that. But your position was your portfolio is ideally put together so you cannot and spicy short every now and then, and I'm glad it worked. But other than that, I was just enjoying reading all those comments and laughing
mhm.
with people because I read the comment, and depending how mean the comment was, I can have a guess what the performance is
Yes,
usually.
yes, that's
If
right.
they use profanity in the comment, is more than minus 50%. If they
Mhm.
don't use profanity, okay, maybe it's like minus 20% or something like that. So, but
That's true.
other than that, I was just looking from the far and enjoying the week.
You're
We had
eating
a
the
good
popcorn, yeah? While I was
yes,
getting while I was getting really insulted there.
yes.
No, but I wanted to thank you also, Dimitri, publicly for your nice words of support. There were several PIs, you and several other PIs, which we will
Mhm,
also have as guests, by the way, soon. One of
mhm.
them that actually wrote me a mess, like really nice messages, privately. They were like, "Hang in there, Akim. Ignore all those people who insult." So I find this kind of support is really actually important between us investors, rational investors. And so I wanted to just emphasize that there are also good things happening online, not just bad things. So don't get
Yes,
scared of social trading. Don't get scared of sharing your opinions. And at the same time, just know that no one knows what is going to happen tomorrow. No one knows it, right? So even if you have 300 people telling you that you are wrong, and the 300 of them share the same opinion, it doesn't mean that their opinion is what their forecast is the one that's actually going to
Yeah.
happen. Yeah. Because no one knows for sure. It's all matter of risk. So those guys, the 300 of them, a lot of them went all in GameStop, even with leverage, right? In my case, I shorted, I would say quite safely. So I think it really depends on this. You make the bet you want, as long as you do it safely, you cover your risk, you manage your risk. It's all about risk management, really, in the end.
Yes.
So
Yeah,
the
you
thing
can
is,
make,
yeah,
you
what?
can make, you can't be rich in one trade. You're not gonna get rich in one trade, going all in and putting leverage on it, hoping that this thing is gonna double and triple. You have to pick your spots. You have to do, like you said, your risk management accordingly. And if something goes wrong, you want to make sure that you live to invest another day. You don't want to get killed in one single trade on GameStop of all trade. I mean, if you get killed on Microsoft, okay, I get it.
Mhm.
But on GameStop, I mean, there's a time and a place to take more risk, but and some
Yeah,
people
no,
will.
absolutely. Absolutely. Now I'm thinking also, so I set some alerts again on GameStop, like a
Mhm,
$50 alert, so that if the price exceeds again 50, that I would get a notification. I don't
mhm,
know if I would do a trade again. I just
mhm,
put that alert so that it wakes me up, so that I go
mhm,
on my desk and that I make my assessment and my research, and then
mhm,
see whether it's an interesting opportunity to start shorting again. I do feel like there could be a rally again next
mhm.
week. It could be some kind of dead cat bounce kind of thing. What do you think, Demetrius? What is your
Yeah,
feeling? What is your feeling, Dimitri? What is your feeling
I
here?
think it's gonna be another pump. It's gonna be another pump and dump. I sent you that tweet. People were buying June 21st calls for 120. So I don't
Does
think it's
it
gonna get.
mean, yes, does it mean that the stock, so it means that a lot of people actually think that stock could potentially reach that level, right?
Yes, and I mean, if you follow what people buy on calls, you're gonna think that, I mean, some people buy just crazy things. It doesn't mean it's gonna happen. But I
Yeah.
think we're gonna have another pump. But I don't think it's gonna be as big as what we got last week.
Mhm.
Uh, if you put your alert and since you got some profits now and you're playing from a strong position, because if you are already minus 20% for the year, you're playing from a weak position, you're trying to force things.
Absolutely.
So now you're playing from a strong position and you short it. So if it goes to 100 or 120, oh, you're gonna be all over it. You say 120, okay, I'll take my chances. Couple of other, you know what I mean?
I am going
Just,
to consider, but I'm still not sure that I would enter the trade again. I don't want to say a definitive answer and then next week to tell you, oh, by the way, I did the opposite. Uh, I want to be careful here because out of experience, but it's a personal experience. It's not something mathematical or scientific. It's really, I don't know, it's just how it happened. It's maybe a bunch of coincidences, but very often when I do a trade, and it's successful, and I do that same trade later in the future,
Mhm.
it's usually not as successful, actually.
Okay.
And I cannot exactly explain why, but basically this time I did a clean trade and a clean exit. I have the feeling that if it peaks again next week and I again short, that it might be, I might get more headaches than I had this week.
Yeah,
I don't
and
know if you
this
had a
week,
similar experience, but in my case, usually when I buy some asset and I make a profit and I do again that trade, it usually doesn't go better or doesn't go as well as the first time.
I mean, this week it was a textbook trade. You got in on a Monday, you got out by Friday with a lot of profits. Okay. Maybe next time around, you're gonna get in, but you're gonna stay in it for a few weeks.
I might be
And
stuck there.
yes, and that's a very stressful situation to be in. So it was a clean win this week, but you always keep your options open, and and you never know how things are going to work out in the future with GameStop. I mean, regarding fundamentals, there's nothing there, right?
So, I looked at fundamentals again yesterday. I wrote an article. I think it will be published soon. The editors will review, and then I think it will get published soon on Yahoo Finance. At least I hope that they don't think it's trash. I did some research on fundamentals, really a deep dive. And actually, there's some interesting things happening now. They're transitioning their business model. That's also why they're selling their shares. It's a way to reinvest and somehow transitioning. The ratios are improving, like return on assets, return on equity, right? The money that they put in starts, so it still loses money, but we can see some kind of something happening since the beginning of this year. But it's to be confirmed, right? Maybe it was just a good couple months. Even though sales were again horrific, I mean in the bad way, and they declined again, they said. But I feel like there is something happening in the business model, but it might be too late. From what I understand, is they really looking to convert into an online kind of business that would deliver things quickly. GameStop is a brand. The brand is there. People would type on Google GameStop, right? The store is known. And so if they successfully implement it and at the same time manage to have great logistics like Amazon has, or at least close to what Amazon has, maybe a partnership with Amazon, or maybe they should sell themselves actually to Amazon or sell themselves to Walmart. There is some kind of potential for growth catalysts, right? But the problem is that it's a bit too late. I feel they should have done it in 2019 or 2020, 5 years ago, at least. Even better if they did it maybe 8 years ago. The decline really started in 2016. Then it really started to decline, and the decline accelerated in 2020. So if they transition their business model at the time, I think that I would even have gone long on a long term. Now it's a bit too late for me to go long, even if it reaches a very low level. So
Yeah,
this from the fundamental side, but yeah.
it's a stretch. You can make the, I mean, you can make the case for anything that it has potential in the future. Okay, I can get the data and I can show them to you the way I want, and I can make the case for anything.
Yes.
But I don't see the case for
But
GameStop.
fact of the matter is that it's just is in a continuous decline since 2016, and maybe there was a dead cat bounce in fundamentals earlier
Yeah.
this year. We will see
And
the fact that the company sells also a lot of shares. That might also mean something that's not good. I prefer to use the money to go long on companies that are currently good and buying
yes.
shares back, paying dividends. Why not? But buying their shares back, this is what I want. So it's a little risky to go long on GameStop. I don't see a really interesting risk reward ratio now to go long. Stay away. Warren Buffett got rich without investing in meme stocks. Take your time to get rich. You have time. It might take 10 years, 20 years, might take a couple decades, but at least you get rich almost surely and steadily. And I think this is actually a good conclusion for our episode about meme stocks. Trade safe and be careful.